welcome to Money Mind. After a volatile first quarter, how should investors recalibrate their portfolios? It's back to the office for more workers this week, but will the workplace look the same as before? And why people are paying big bucks for digital stuff that can be downloaded for free. But first, here are some of the top business stories this week. Singapore Exchange is seeking public feedback on a proposed regulatory framework for listing special purpose acquisition companies, or SPACs, on its main board. SGX is the first major Asian bourse to consider SPAC listings. Private home prices in Singapore rose by 2.9% in the first quarter of 2021. Prices of HDB resale flats also rose for a fourth consecutive quarter, climbing by 2.8% in the first 3 months of 2021. Concerns over the disruption to world trade and supply chains continue after a giant container ship was finally refloated in the Suez Canal. Over 400 ships were affected by the blockage. Chinese phone maker Xiaomi is entering the electric vehicle market. The company said it will be investing $10 billion in the sector over 10 years. Global banks are poised to lose $5 to $10 billion from the Archegos capital fallout, according to JP Morgan. The forced unwinding of leveraged bets by the Family Office Fund could see Credit Suisse and Nomura Holding suffer the biggest losses due to their exposure. Despite such volatility, markets have continued to power ahead in the first quarter, and we are now in Q2. So what has worked and what hasn't worked? And are there any new trends or risks that investors should be aware of? Chor Keng Yit looks for the answers. Markets started 2021 on the same bullish note as they ended 2020. Progress on vaccination rollouts, low interest rates, and a monetary system awash with liquidity, and fiscal stimulus from governments worldwide. All these factors were in place to support economic recovery. But then investors got skittish about inflation and pushed up longer-dated bond yields, bringing about a bout of volatility. This tug-of-war between the bulls and bears will continue to play out in the market, making this a good time to take stock of one's portfolio and look for investments that can withstand the turbulence.
Where have returns been greatest and where have returns been less strong? When something has been over-earning relative to its long-term history, it probably is a wise time to kind of take a pause and think if the better returns going forward will be available from elsewhere.
Experts say growth stocks, particularly those in the tech space, are one example of an overvalued sector.
We've seen that overperformance of the growth style versus value now running for over a decade. Some of that will moderate. And even if that doesn't necessarily mean that markets have to have a big correction in prospect, it means that the shape of returns could broaden out. So you will get an internal rotation in the market.
Other experts, however, continue to see opportunities within selective growth stocks.
Some of these circular themes, like, for example, in digital consumption, cloud computing, cybersecurity, I think these themes are going to be intact, even if we go into a post-pandemic era, right? So with the recent market pullback, and we see share prices of a lot of these related stocks actually coming back down, it is a good opportunity to actually cherry pick and pick out some of the good quality names that have actually consistently delivered growth.
Market watchers say investors can look to value stocks. These tend to be cyclicals, which means their performance is linked to the strength of the economy.
This could include stocks in the financial or energy or commodity space. But bearing in mind, some of these stocks have also run up. So you do want to look at names where the risk reward is still attractive, and also companies, businesses that are actually running well in terms of operations versus their peers.
But as with tech stocks, investors will have to be selective.
Quite a number of these cyclical sectors are still facing structural headwinds. For example, within the energy sector, right, there's this drive towards more green, renewable energy, right? So for oil and gas company, is it trying to actually adjust its mix away from more fossil fuels into those renewable energy? I think that's one important note to think about. And then within the financial sector, right, we also see the emergence of fintech going into the financial space. So how are your traditional banks actually facing these competition and actually trying to evolve their business?
ESG, or environmental, social, and corporate governance investing, is also set to gain more prominence in investment portfolios. And research has shown that it pays off.
There are empirical studies, not by one manager, but by many asset managers, who are able to show that companies of similar country or similar sector have significantly outperformed if they have been incorporating sustainability objective in their company mission, and more importantly, supported by the successful implementation of those goals.
Related to the sustainability theme, brown or non-green sectors like oil and gas could see growing investment interest.
We are actually seeing a number of these, especially oil majors, trying to turn more green, right? Trying to change their energy mix. It's going to be a process. So, but if the valuation actually, is attractive, and I think if you do see these companies making good efforts and good progress in becoming more sustainable, I think it is actually worth considering investing in some of these companies.
ESG may be hot, but investors need to be careful not to overpay for these stocks.
We did see some speculative trading frenzy in the beginning of this year, including some of these sustainable related sectors, right? For example, the electric vehicles, right? A lot of them are actually still very good businesses, but because the valuation may have actually run ahead of the fundamentals, we did see some profit taking. So I think for investors looking to invest in these sustainable related sectors or businesses, I think you still need to be mindful of valuation.
There is one investment theme that has lost some favor among investors, though. REITs, or real estate investment trusts, have historically been popular because they offered a steady stream of income.
We need to be careful about those that are likely to suffer as a result of falling occupancy rates and lower rental yield. But by and large, some of the other companies are well prepared for this. So they're working together with the tenant, come up with solutions to tide through this period. We really need to do a lot of homework to understand each individual REITs company and whether they will benefit or they will actually suffer as a result of the COVID situation.
Building a resilient investment portfolio requires regular check-ins to make sure the portfolio remains relevant to one's investment profile and needs.
While you need to review, but we would not suggest investors to overtrade. And I think the critical thing here is to adopt a longer-term view on investments, because I think that would be a better way to ensure and enhance your overall risk-reward.
Still ahead, how the COVID-19 pandemic has reshaped the central business district and what you need to know if you want to invest in the sector.
Get your hands and feet moving for a brand new season of Gangnam Insiders Picks. Find out how iconic Korean dishes are trending with a new twist, and where you can learn the latest beats using traditional instruments. It's a mashup of the best things old and new that you should experience in Gangnam. Gangnam Insiders Picks, Sunday on CNA. Gangnam Insiders Picks is brought to you by the Gangnam Gu office.
DBS Bank and MediaCorp have come together to produce Food Wasted, a 3-part digital exclusive on CNA Insider to raise awareness of food waste across the supply chain.
Each and every little bit of food that is wasted adds to the amount of greenhouse gas produced. It is a huge problem, it's a growing problem, and that's why at DBS we think, we should actually do our part to raise greater awareness of it and also help people to take actions to do something about it.
Food Wasted features inspiring stories, including those of social enterprises supported by the DBS Foundation and their efforts to work towards a zero food waste future.
MediaCorp is glad to work with a like-minded partner like DBS Bank to create informative content that can motivate our audiences to adopt sustainable lifestyles. We hope this CNA Insider Special will motivate all of us to waste less and be more thoughtful about the way we buy and consume food.
In collaboration with...
It's my own little haven where I can retreat. We have gardens and space and birds flying around and greenery, and people have a little bit of space. People get along really well overall. It's a wonderful community.
Going in the kampung house, that memories is always there in my mind. And I'm lucky that my son has a chance to do so.
To me, a home is a refuge. It provides you a sense of belonging.
It doesn't have to be a physical space. Home as a concept is how you feel about that place, and feelings and your sentiments about that place.
We are not living in the museum, and we shouldn't live in the museum. So that is why we always try to balance change in all areas, because we want to make sure that the present generation has enough of inheritance from the past, but also will create inheritance for the future.
Japanese businesses could miss out on an economic boom, with Tokyo saying the Olympic Games will be held without foreign spectators. This dealing a strong blow to those that have invested heavily in facilities to prepare for one of the world's most important sporting events. That's on our next Asia First.
Welcome back to Money Mind. It's been 1 year since Singapore closed most physical workplaces as part of the island's circuit breaker measures. 1 year on, the picture looks very different, with up to 75% of workers allowed to return to the office from this week. In part one of a new series this month on sectors most affected by the pandemic, Jonathan Pearies finds out what the reset will mean for the office sector and the future of the Central Business District. Singapore entered the circuit breaker on the 7th of April 2020 in a bid to curb rising local transmissions of the COVID-19 virus. Work from home became the default option. Entertainment venues closed, and food outlets could only serve takeaway or delivery orders. The Central Business District became a ghost town overnight. 1 year on, the crowds have somewhat returned, and a flexible, hybrid way of working will be the new normal. But will this new normal look like the pre-pandemic city centre?
CBD is not dead. Rents have been very firm for the great AAA. Those built for the internet age, built in the last 15 years, right? These buildings, they are still full, and rents are very, very firm. It's only when you go downscale that you find rents starting to soften. And then we find these movements within the Grade B buildings. There are being offices that are decanted. Some have decided to shut down. So it's not, the colors are not uniform across the board.
After a year when many adjusted to working from home, employees will have to transition back to the office environment.
Even the studies are also unclear. Some says productivity fell, some says maintained. Microsoft said that it went up. Then Microsoft also found that from the data, research, big data, that there's exhaustion among workers because productivity has gone up. And so workers feel that they are exhausted, they work longer hours. Video conferencing takes longer time than the physical meeting that normally happens in an office or face-to-face environment. And then there's also social stress. You don't have the social networking with your colleagues.
One trend that was on the rise even before COVID is the popularity of co-working spaces. Some experts predict that the new normal will be a hybrid model.
You will have some core employees who would be coming to office every day, and you would have a part of employees who would be partly working from home. Some employees may be coming in for a few days, 3 days or 4 days kind of thing. So you would be seeing a lot more of hybrid plus flex working approach in the future. We have seen a lot of even companies incorporating this flexible working and co-working spaces in their buildings. So definitely co-working is here to stay.
One developer that recognized the need to include a co-working or flex space component in their building is OUE Limited, which partnered with the Work Project in their OUE downtown development.
The increasing demand for flex space is a very interesting scene that is evolving and also will very nicely coexist with the traditional format. This is also in meeting the needs and demands of our new generation workers, the Gen Zs, who are more concerned and put a lot of emphasis on a balanced lifestyle. So with this, this working arrangement that companies will retain and rolled out, it would certainly make it more attractive to keep, the staff of this new generation.
OUE was also one of the first to redevelop a pure office building into a mixed-use development that has a hospitality component as well as retail.
It fits the needs of the ready catchment, which essentially meets their lifestyle needs. So if they're working here or they're working close by, they'll be able to, get all their workouts, their nutrition and their F&B and all that, all within this space. We even have a childcare facility whereby they can drop off their kids, go to work, pick the kid up, have their dinner and go back. So all this, for us, is that whole ecosystem.
Experts say this trend of moving away from mono-use office buildings will continue and is part of the government's push to bring life back into the CBD.
The scheme, CBD incentive scheme, and also the strategic development incentive scheme, these are the schemes that are trying to encourage the older building to redevelop and innovate in the sense in kind of use type. So you want to bring more life back to our CBD. Instead of traditionally CBD is a mono-use type, you see the place to be used a lot of people during the day, but during the night it kind of goes down. Even weekend we don't see any people in the CBD area. How are you going to bring back some of the life to the CBD? CBD is a very exclusive, and the land price is very expensive. So you want to see how we can actually better mix the CBD to make the CBD more lively.
Besides this, Prof. Singh also thinks that one of the longer-lasting impacts of the pandemic is to make building owners incorporate pandemic controls into their design.
You probably see a lot more segregation, not just in terms of building density. Within the buildings, how are you going to segregate some of these transmission risks? Because I think traditionally our buildings are designed as a very enclosed system. You have the central air conditioning system, and this air conditioning system support the entire building. The air is actually flow within the building and circulate within the building. So this is not a very efficient way to reduce some of this transmission of the pandemic. I think moving forward, we may be more concerned and more careful about how to make our internal space more eco-friendly and so more pandemic-proof.
Coming up on Money Mind, why people are paying millions for digital art that can be downloaded for free.
Night is half of our lives, and yet it's so understudied.
In Singapore, there's lights just about everywhere.
NASA is just starting to scrape the surface.
Looking at the lights, we're able to track humanity's progress.
That's where the pieces of the puzzle fit together.
Midnight Story, Sunday on CNA.
You say you got it all worked out. I'll say I know where I'll go now. You say you're settled and patient. I'll move along and keep racing. You say you're headed for greatness. I'll go wherever takes us. You say you're headed for greatness. I'll go wherever fate takes us. I'll go wherever fate takes us.
The COVID-19 pandemic has severely impacted our world, but the challenge of climate change is still present. The CNA Leadership Summit is back to discuss a green recovery to mitigate the crisis. How can we rebuild our economies in a more sustainable manner? How should governments, financial institutions and global standard setters work together to achieve compliance, accountability and ethical disclosure? The CNA Leadership Summit 2021, coming to you this April. Organised by MediaCorp. What are the financial forces driving Asia's rise, from transnational business expansions and technology for digital growth to untapped opportunities in the region and beyond? Understand the trends, innovations and corporate deals that are building Asia. On Asia First, Monday mornings on CNA.
Welcome back to Money Mind. How much would you pay for a digital image of a cat? Well, collectors have been shelling out big bucks on such digital collectibles, known as NFTs, or non-fungible tokens. But the boom in NFTs is also sparking concerns about a bubble. Pamela On has more. A collage of digital images by the artist known as Beeple sold for $69 million. The first tweet by Jack Dorsey, CEO of Twitter, sold for $2.9 million. But the individuals that bought these digital items received nothing tangible back. Instead, they got a digital token known as an NFT, which stands for non-fungible token.
So the reason why it's non-fungible is because these tokens have unique properties from each other, so they are not mutually interchangeable like other cryptocurrencies such as Bitcoin or Ether. They are fungible because your one Bitcoin values the same as my one Bitcoin. But for NFTs, because they have all these rare and unique properties, they are not interchangeable. So you can think of them like Pokemon cards or limited edition sneakers or Picasso's artwork. So NFTs is essentially a proof of provenance, which means the origin, the authenticity, and all the ownership and transaction details of its underlying assets.
The underlying assets of NFTs can be anything from a meme to a digital self-portrait and even an online pet. That's how NFTs first went mainstream in 2017 with CryptoKitties. CryptoKitties was a blockchain-based virtual game that allows players to adopt, raise, and trade virtual cats. Back then, some of these virtual cats were already trading for over $100,000. The NFT market was worth about $250 million last year. Year to date in 2021, turnover has already reached approximately $200 million.
Because NFTs support so many different industries, whether it's digital art or in-game items or music, even domain names, right? I would say the potential is huge. It's just a matter of time.
NFTs are not just purely for collectible. You know, right now at this current moment especially, I see a lot of these big purchases, big valuation and so forth. It is actually part of a process to let people know about what NFT is, right?
Stakeholders in the crypto space say that NFTs are a new and different form of asset class. But the underlying asset of an NFT, like a digital art piece, can be replicated easily the very next day. So why pay so much for something that you can download for free on the internet?
At the end of the day, whatever price that I pay, I assign a certain value to that token, for example. In order to sell it, I will need someone else to assign a greater value or greater price to that token. So as things stand, sure, there's a lot of interest, but I think that's where the debate as to whether or not the price you paid, does it equate to the value that you're deriving from it.
For digital art collector Cao Yin, buying NFTs helps him to record the milestones of both physical and digital events. He bought his first NFT in 2017.
就比如说我早期收藏的一些作品，可能我买的时候，如果按照当时 Ethereum 价格折算来看的话，也就是差不多$1000多、$2000多。现在我当时早期收的那批作品，基本上每件都在$100万左右。
But despite this, he doesn't intend to sell.
因为我收藏这些作品初衷就是为了收藏，并不是为了做交易，并不是为了在低价买高价卖，然后去赚更多钱，不是如此，这不是我的生意。对我来说的话，我是从一个收藏者的角度，然后去把这些记录上我们整个 crypto 包括我们的 digital 时代发展的每一个的 milestone 给收藏到我自己的这个 vault。
For now, NFTs can only be bought using cryptocurrencies. Many of the recent headline-making NFT purchases have been made by crypto investors.
Many of these NFTs right now at this current moment are transacted using cryptocurrencies only. And then when they say it's 2.5 million and so forth, it's a conversion from the currency to US dollars. So that's how they came up with that number. And then if you look at the crypto community as a whole, to be real honest, some of us, we do have support for some of the main token.
Experts also warn of the environmental impact trading NFTs might have.
The amount of cost that is needed to run all these machines to mine the token, the amount of electricity that's needed, and of course, if you want to look a bit backwards, a lot of this electricity is still being powered by fossil fuels, and that may not be ideal for the environment.
The NFT trading boom has sparked concerns that this is the newest crypto bubble.
如果说 take the whole crypto 或者说 whole NFT as a whole 来说，的确是有泡沫，而且泡沫还不少，泡沫非常大。但是当中的那些 gems， 那些我们称为真正的这个 masterpieces， 现在其实是仍然是有被低估的。
The general rule of thumb is do not buy it because you believe the value will go up. Just buy it like you collect any other things, like collectibles, Pokemon cards, and then just don't expect to make money out of it.
I wouldn't say it's a bubble, but I do think that there's a level of froth in the markets, and it's adding on to itself because of the high prices and the increased attention. I would just say that at least for your average investor, they should be mindful with regards to the platform that they're investing in, and to just look at these assets for what it is.
As for the artist known as Beeple, he's confirmed that the sale proceeds from the record-breaking $69 million JPEG have already been converted into cold hard cash. Why digital art is trending as an investment theme, steering a course through volatility in the markets, and how post-pandemic realities will reshape the places where we work, live, and play. You've been watching Money Mind.
Hong Kong is always on the go. Don't believe me? Just count my steps. In a city where